Okay, thank you very much for that, Dipan. Let's invite Amit Gupta, Senior Vice President, Fund Manager at ICICI Securities Portfolio Management Services PMS on the show now. Amit, on these defense companies, while the order wins have been very, very robust, there is a risk of execution. There is a risk that the revenues are going to be lumpy. And of course, valuations have also run up considerably. How would you assess the pros and cons, the risk reward in the defense stocks now?
So I think one very interesting thing is that, in the defense, you have number of, items. For example, you start from aircraft, now you are going into, artilleries, then you are going into some other things, and then drones. So there is, if you look at, in this particular basket, there are so many things now, and the government is really agile actually in getting all this from outside. I think this may be a big thing opening up for India. Valuations in the short term, I think definitely are looking a little more costly. But otherwise, if you look at the longer trajectory from here, I think very good upsides are possible in these stocks. Now, when I look at Bharat Electronics, for example, the stock, I think our target is going beyond 150. It has reached to 125, 127 levels right now. Hindustan Aeronautics, you are already seeing the stock split is being announced. So I think before that, there may be, some momentum, but after that, there may be some consolidation also possible in the stock. So overall, I think the other trajectory of defense, like you talk about the Mazgaon dock, Bharat Forge is another stock which has been reeling actually at little lower levels. I think that can also come up because they are also talking big about the defense orders going forward beyond the auto ancillary theme that they are looking at. I think one thing which was dragging Bharat Forge so far was the Class A trucks in the US. So there are a number of things attached to this stock. That's why it has been underperforming. But I think the defense angle goes for them also. So that can also one stock which can perform going forward.
Okay, so a positive on defense. Amit, just stay on. We have more questions for you. We just also want to address this news on Shree Cement that's flashing on the screen. It seems that the Ministry of Corporate Affairs has now decided to initiate some sort of investigation into Shree Cement. This is an inspection order really against Shree Cement, and it's coming from the ministry. The stock is reacting negatively. We have our colleague Timsy joining in. Timsy, is this connected to the ongoing IT searches? I think, okay, we don't have Timsy at the moment. What we know is that there's been some aspect of some allegations of related party transactions, and of course there was the IT searches that were going on.
Yeah,
so it seems now there's an investigation. That's
we'll have to see, because the stock pulled back big time when initially the survey charges did come about, and then it stabilized. So some part of the street still believes that some of those numbers that came out there, there were many thousand crores that came out. It wasn't a possibility. That's the, the verdict that the street has taken. So we'll have to wait for the outcome out here. But it seems this is something to do with on those lines itself. And that's why the stock is not getting smashed out of shape. Because as it did pull back and then it stabilized. So now we're waiting for the outcome of this. But for the time being, the fresh news is that the MCA has issued inspection order against Shree Cement.
Okay, for what it is, it is a bit of an overhang on the stock. So let's see how this matter progresses. Amit, to get back to the conversation with you, largely speaking, industrials is one side of the market. Capex plays or industrials, which I think most managers are quite optimistic on. You yourself have spoken, quite positively on this theme in the past as well. But tell us, how would you now play it? Through what kind of stocks where you still have good entry points and you still have some valuation comfort?
So yes, definitely. So here also in industrials, you have a number of parts. So I think one of the angle is bearings. I think one should look at this now because they have already gone through a long consolidation now. When you look at Timken or SKF, so SKF had corrected already from 5,000 to 4,000, and then this move, a very recent move has started because now it has got the approval for Class C and Class K, bearings for the railways. Along with this, SKF caters 50% to automobile also. And automobile, what we are seeing because of lower crude prices, because of interest rates seems to be topping out. I think the automobile is making the bottom in India. And that is where the segments catering to automobile, they are also coming up. So SKF is one, I think, which can have a good revenue generation going forward. I think the results also will be pretty good. And this new angle of railways, I think this is another kick. And you are seeing that 90,000 wagons requirement has come. So you have already seen a direct companies manufacturing the wagons performing really well. So yes, 60-70% comes from the Kolkata region actually because they are based there. But not only that, I mean, if you look at the bearing companies, the fastener companies which are linked to that, they are also going to see the surge in the revenues. And that is where in India, luckily, we have one of the largest producers of bearings in the world, which is SKF. I think we should look at such kind of companies now, where the corporate governance issue is not there. They have been for a very long period now, and they have shown execution skills. And I think the FIL money, when it comes in the market, it definitely looks into such kind of stocks now.
Okay, all right. Talking about some corporate governance issues, Amit, one company that's never had any of those issues is Shree Cement. But off late, there is some news flow that's coming in, which is quite negative for it. My colleague Timsy, she's going to join. She's going to tell us what latest she's picked up on Shree Cement, and then we'll come back to you, Amit, to get your view on it. Timsy, go ahead. What are you picking up with regard to Shree Cement?
Well, sources are indicating that MCA has now ordered inspection in the books of accounts and the entire working of Shree Cement, and this is with respect to issues related to corporate governance, with respect to issues related to wrong filings with the income tax authorities, and not to forget, there has been a recent survey also that happened by income tax on Shree Cement, and this investigation order, this inspection order is also with regards to related party transactions. So all these three issues are there when it comes to what MCA is currently looking for, and they want Shree Cement to come forward and clarify during the inspection. Let's see what happens, because another issue that was there in their mind is also pertaining to CSR. Let's see what exactly MCA officials they find once they begin this inspection. What is the final report that they submit with respect to Shree Cement?
Okay, all right. Timsy, appreciate you joining in and giving us, that quick update out there. Well, Amit, Shree Cement has been the best pedigree, one of the best run companies that we have seen from the cement space itself. And that's why it gets a valuation premium. Now, suddenly, this news that's coming in there is making things a little bit gloomy. How would you approach it? We know it's a well-run company, lowest cost producer of cement. Valuations a little bit elevated, but they have good amount of expansion plans as well. Will you look to buy into this kind of dip, or do you think that you'll wait and there are other better cement options?
So I think there is too high an expansion. If you look at the whole cycle of infrastructure, we have not seen the cement stocks participating that much. And the reason being that if you look at the expansion now, so almost everyone is going to be double in capacity. Adani Cement, they are talking about from 70 to 140 million ton. Ultratech Cement, which used to be 113 million ton, they are talking about 160 million ton. So in that case, the capex, the supply is going around 14% of CAGR, but the demand actually is coming up. So infrastructure was driving the demand. Housing is picking up now, but still it is 9-10% of demand pickup. So there is a mismatch. And we have seen because of this, the cement companies have not been able to increase the output price, or the cement price rather. We saw it in the month of February, but it was rolled back actually afterwards. And that is why historically, if you look at the EBITDA per ton in the cement companies revive only when they start increasing the output price. I understand the raw material cost of petcoke and all, it has come down. And going towards election, it is also possible. Yes.
Amit, I just want to understand, will you buy into this weakness on Shree Cement?
So we had this stock, but we have exited actually before because of the premium valuations.
Okay.
Any thoughts on Apollo Tyres? I remember earlier this month, Morgan Stanley had downgraded the stock, and they're saying that all the positives are priced in. The company itself has laid out an FY26 or 2026 vision where they want to improve margins, improve their return ratios. But according to some on the street, it's probably priced in. How would you look at Apollo Tyres in the entire tyre pack?
So I don't think so. I think if you look at the last whole decade, it has been, highly underperforming stock. And the reason being, we saw a lot of problems in the European area also. But now they have increased their market share actually very smartly. Almost 270 bips of market share has been increased in the European region, from where they are getting 30% of the business, because they operate from Hungary. And we have seen that the whole energy cost which has moved up in Europe, it has not impacted that much actually in that particular region from where they operate. When I look back into India, I think the interest rate seems to be topping out. And if you look at the crude prices, which is where the rubber prices actually are taking, the price that is a derivative actually of crude. We have seen that because of lower prices, there is sudden demand which is coming up, and it is also not going to be impacted with the EV disruption. So overall, at a 21 price, 21 times stock, which is much lower than MRF, which has already crossed 1 lakh rupees. I think this is one stock which is cheaply available. And relatively, on relative terms, I am saying, and I think after a long period of consolidation, it is coming out. So in that case, I don't see a major downside here. Rather, if it has happened a little bit, I think you should accumulate more and look for beyond 500 type of targets actually going forward.
Okay. By the way, quite a few names on the mid-cap and small-cap screen that are up and about today. There's also Tejas Network, Cochin Shipyard, Garden Reach Shipbuilders, a lot of these names. Mazgaon, of course, we've been discussing. There's Bharat Dynamics, which is up now a good 14%. Big moves on these stocks. And then, of course, you have the recent listings, which we've been discussing, both Cyient DLM as well as Idea Forge. Lots of names moving around. So let me end with the two hottest themes in the market, Amit. One is EMS, this electronic manufacturing services. And we're seeing what that has done to stocks, whether it's a Sirma or, the new one, Cyient DLM. And the other, obviously, is defense. Anything that has defense on it is just, skyrocketing. How do you find valuations? Because, in both these areas, for EMS, we're talking valuations of 50 times, 60 times forward earnings now. So are you comfortable? Would you look at deploying any additional money here? Or would you steer clear?
So it's a new money which is going there actually. So you cannot define the length of the, to the extent the stock price can move. It is very difficult whenever such kind of money flow starts. These stocks were not participating in the last whole decade. And that is where actually, you will find new stocks coming up in this particular reason. So Bharat Dynamics, you just mentioned, before that we saw HAL and Bharat Electronics were performing. But now Bharat Dynamics also actually it has started performing. So you will see a consolidation period, possibly 1 quarter or so, and then again these stocks can start participating. So I think it's a long theme which is building up in India right now. We will see more private players also participating. That will be another kick. Right now, what names you have taken, these are mostly the PSUs, but private players also will come in, and I think that will define the new canvas for the defense. Now, when I look at the exports, I think whatever targets were taken in the PLI, so actually very clearly they have been exceeded. So that shows there is a lot of production push which is happening in the export, which is being exported also. If you look at Dixon, for example, so Dixon came down previously because we saw in the B2B segment, sometimes when the customer is not ready to give you higher premium, then you have to shrink your margins. And it happened with Dixon in case of Samsung also. And I think once the stock has come down, I think valuations are pretty good now. The stock is already halved from the higher levels. And now slowly we should start looking at, because the manufacturing theme in various segments in India is going to pick up. We cannot stop this particular move now in the Indian markets. I think you have to create your portfolios by looking at such kind of companies whenever such kind of downsides are coming.
Okay, all right. Amit, I don't know, in your earlier avatar, you used to track the F&O and the derivative space very, very closely, I think. So, still looking at it?
So, volatility is still down. I think definitely. So, when the vols are down, it gives you a sense that the put options have been written very strongly in this market. I think it may be a good trend for 2 or 3 months now where we are in.
So, you think that downside could be capped, right?
I think so. I think more stock-specific scenario for at least 2-3 months now.
Lovely. Thanks, Amit, for giving us that view, and thanks for discussing all those stocks as well. I recall many years ago, we used to discuss a lot of F&O derivatives as well on television. Thanks for giving us your view out there. By the way, we'll be having that chat with